Hello once again, everyone. My name is Paul Mead and I'm the PPSR specialist at CreditorWatch. And I'm joined by Terry Ledlin, Special Counsel with Ledlin Lawyers. We have a lot to get through today, so we won't be taking live questions, but please submit any questions that you do have and we will respond to you after the webinar. So Terry, what will we be covering today?
Paul, today it's another big webinar. We've looked previously at why the PPSA is important, how to register correctly. Today we're going to talk about some situations that might arise once registration has taken place and what to do if your company enters into an insolvency event. I should say your customer, not you. Importantly though, you're also going to give everyone a closer look at CreditorWatch's PPSR portal, PPSR Logic.
If you've tuned into our last two webinars, you probably already know a bit about CreditorWatch and Ledlin Lawyers, but you can read a bit more about us here.
Paul, sitting next to you, I can vouch for the fact that neither of us look like Tom Cruise.
I can still juggle though, Terry, so that's a plus. So let's do a quick recap of our previous webinar.
Okay, Paul, last time we discussed how the PPSA is very prescriptive and provides strict timeframes for registration. You can see some of the timeframes prescribed by the Act here. The real message is register as soon as possible. Paul, I think you're going to look at how to do that through CreditorWatch's online credit application Apply Easy. You need specific information to register on the PPSR, including grantor details, description of collateral, and an end time for registration. If you don't get that basic information correct, your registration will be defective. Some common errors or mistakes are often found in the grantor details: incorrect serial numbers, incorrect collateral classes. Just always remember that courts can't rectify defects, but they can grant extensions of time. It's getting very close to the end of the initial 7-year period when a lot of registrations will expire. You can expect a big spike in traffic on the PPSR, so please don't leave it to the last minute. Check when your current registrations expire. Then look at amending, renewing, or creating new registrations if your current registrations are expiring soon. And look at how any amendments to your terms and conditions might affect those registrations. So Paul, let's get down to business. Can you talk to us a bit about PPSR Logic?
Thanks, Terry. PPSR Logic has a wide range of features, including the ability to import all of your existing registrations into the portal, as well as the ability to create templates to lodge your common registrations, and to undertake bulk uploads and streamline the customer approval and PPSR lodgement process. Before we get started on the demo of PPSR Logic, let's do a quick poll to find out how many of you are currently registering. I'll load up that question for you now. I'll just give you a minute or so to answer that before we jump on. Okay, fantastic. So it looks like 64% of you are currently registering and 36% are not currently registering. We'll now jump into a video of our PPSR Logic live demo.
This is CreditorWatch's proprietary PPSR portal, PPSR Logic. Via our system, you can import or create your own SPG, develop templates for registering, and also manage all of your existing registrations. As a first step as a customer coming into PPSR Logic, if you're already registering, we can import your secured party group, and as part of that process, we will also import all of your existing registrations. If you're new to PPSR and new to CreditorWatch, we can create your SPG and access code as your first step to get you up and running with registering. If we import all of your existing registrations. If you are currently already registering, your registrations will...
Might just stop the demo there. Apparently we're having a couple of issues with the sound quality. What I'll do is jump into the portal itself and run you through how PPSR Logic works. So as I briefly touched on, with PPSR Logic itself, if you're new to PPSR, we can create your secured party group, which is the first step in registering and creating your security interests. Or we can import an SPG that you've currently been using, as well as the access code. And by importing your SPG, we'll import all of your existing registrations. The beauty of importing all of those registrations is you can have a look at what you've previously done in the past and make amendments to those registrations as need be. Talking about registering and making amendments to your registrations, if you need to retrieve your verification statement and provide that to a liquidator in assessing your claim, you can do so by clicking on Retrieve Registration. If you need to amend any registration details, you can do so by clicking on Amend Registration. With the renewal period coming up for those introductory registrations on January 30 next year, you can extend the end time of your existing registrations with one click and choose the relevant end time registration. Finally, if your security interest has been finalised, you can discharge your registration again with one click. Looking at your registrations as well, if you wish to download those registrations and store that information locally, you can do so by clicking Download Registrations, and it'll export all of your registration information, including the registration number, the token associated with that registration, and all descriptive fields into a CSV file. If you do want to search any of your existing registrations, you can do so and search on those relevant fields. So grantor, the individual grantor themselves, if it's an organisation looking at their identifier, so ABN or ACN, or the registration number. And if you also want to look at a time period for either when you commenced registrations or when registration is due to expire, you can do so with those search fields there. Another beautiful part of our system is the ability to create templates for your common registrations. So most companies would either register a PIMSI if they're an inventory provider, or they may register a general security interest or an all-PAP. With those templates that we have, you can pre-complete all of the information you have there, and the process for creating a registration is really straightforward. All you have to do is come in, select who your grantor is, confirm the identifier that you wish to register against, and then enter that identifier itself. We'll validate that information for you on the spot, and then if you're happy with the rest of the fields in the template itself, you can go ahead and click Create. And that'll process that registration straight away for you, and will populate within your registrations tab there at the bottom for you to make any amendments that you may need to do going forward. With our templates as well, you can also bulk register. So if you have multiple grantors that you wish to register against, you can list the ACNs or ABNs for those entities and then click Create. The process would be the same as per a single registration. It'll populate in the field there once completed. With your existing registrations as well, if you're happy with the information that's been completed in previous registrations, you can actually complete or create a template rather from the registration itself. That will then populate in the templates field, and you can continue to register as I've previously shown you. With the system itself, we actually are linked into CreditorWatch and to Apply Easy, our online application form. If you wish to create a registration directly from CreditorWatch, all you need to do is run a credit report on the entity that you wish to register against. On the right-hand side there, you'll have the ability to create a PPSR registration. Just click on that link. You'll then select the template that you wish to register against. And then from there, all you need to do is select the identifier that you wish to register against, be it ABN or ACN. We've got those ACN or ABN fields there, so you just need to copy those and paste it into there and click Create Registration. Again, that'll process that registration via PPSR, and the information will show onto PPSR Logic as well. The other integration that we do have is into our online application form, Apply Easy. This is the administration page of Apply Easy, and if you're looking at an application that has come into your administration portal, with the action itself, if you're happy to approve, just click Approve. You'll then select the credit limit that you wish to approve against, and the account ID if you wish to add that in. Click Approve. You can then choose to send an email or not to notify the customer they've been approved. And then from there, you'll create your PPSR registration. So click Yes. Select the template, again, that you wish to register against. Confirm the grantor information, so identify, and we'll validate that ACN for you. And you can submit the registration on the spot there. So we have integrated the systems quite well with PPSR Logic, and that should streamline the process for you in quite a way that makes registering and managing your registrations as well quite easy.
Okay, Paul, we saw in the demo that PPSA renewals and amendments can also be done through PPSR Logic, which leads us to our next poll question.
Right, and that question is, have you done your PPSR renewals? And again, we'll give people just a little bit of time to answer that. Okay, great. So it looks like 83% of you have not currently processed your PPSR renewals, and bearing in mind the initial renewal period is coming up on the 30th of January, so you do still have some time to jump into that. Something that may assist some people in preparing for renewals is to do a data wash to review which registrations need to be renewed and ensure the data on your customers is correct. CreditorWatch can help you with that. What we also saw in the demo that I ran was that our online credit application tool allows you to integrate your PPSA registrations by lodging directly from the application screen. So this brings us to our next poll question. Is your data cleansed and ready for uploading PPSR renewals or registrations? We'll jump in now and launch that. Okay, so it looks like about 80% of you have actually not reviewed your current registration data. So certainly something to bear in mind for the future is that we can help you out with that here at CreditorWatch.
Paul, we've looked previously at why you need to register and how to register, but now let's have a look at what happens once you've registered. One thing we always recommend after registration is to double check your verification statement for any errors when it comes through. It's unlikely, but it is a good practice to get into. The next thing to be aware of is that there are certain notice requirements in the PPSA for a number of different circumstances, including notifying a grantor of your registration. The registrar does not provide the grantor of notice of your registration, and the obligation is on you to do so. The good thing is that a grantor can waive its rights to receive notices in circumstances where the collateral is commercial property and a waiver has been obtained in writing.
Which brings us to our last poll question. Do you currently have contracting out provisions in your terms and conditions? I'll launch that poll now. Okay, so it looks like it's actually a fairly even split between how many people knew that they could contract out of their PPSR requirements and who wasn't aware.
Okay, well, that's a good result to know, Paul. Our first tip of this webinar is to check your terms and conditions. See whether they allow you to contract out of giving notices to your grantor. This will make your life much easier. Also means you don't breach the Act. Bearing in mind there are notice requirements for lots of different things, including enforcement events.
So Terry, we talked a bit in the last webinar about the types of things you can amend, and we looked at it more in the context of errors in a registration. But what happens if your details change or the grantor's details change? Does this actually affect your security interest?
Yes, it does, Paul. You need to have the correct details and register against the correct identifier to ensure continuous perfection.
So why would your details change, Terry, or your grantor's details change?
Well, it might be because the grantor sells or transfers the property either to a third party or to another entity in its corporate group. Maybe you've transferred the right to your security interest within your corporate group. If you've registered, for example, against the trustee of a trust or a partnership and a new ABN is allocated, you'll need to update your registration. Which brings us to our second tip for today, and that is just make sure your terms and conditions require your customer to advise you immediately of any changes to its details. This places the obligation on your customer to keep you up to date. Make sure that you update your registration as soon as you become aware of any changes.
Terry, this is where something like PPSR Logic can come in handy. One of the many features it has is that it enables you to quickly and easily update details and registrations.
It may also be necessary to remove or update a registration if it's been registered against the incorrect entity. This could be because you made a spelling mistake in your registration and registered against a completely different person, or because you thought you had a security interest when actually you didn't. Could also occur if the grantor is correct but it believes you have made an error somewhere else in the registration, for example, the collateral class. You might then find yourself in a situation where you have an amendment demand issued on you. The initial amendment demand needs to be issued to the email or postal address listed in your registration. If you don't amend or remove it within 5 business days, then the grantor could take the matter to court or ask the registrar for a determination. So that will bring us to our tip number 3. And that is keep your address and email up to date on the PPSR to ensure you don't miss out on receiving any important notices. Sometimes grantors will seek the removal of a valid registration. You don't want to lose your PPSA protection because you didn't receive the notice.
So Terry, we've discussed getting registrations right and maintaining the registrations, but what happens if you need to discharge the registration?
This might be required when a security agreement expires or is terminated or is discharged. A grantor might be released from a security agreement or collateral that's covered by the security agreement is released. For example, you decide to stop supplying to a customer or your customer pays off its finance. So tip number 4, just remember this. Discharging on the PPSR does not release the underlying security interest. So depending on the nature of the security interest, you may actually need a deed of release as well. Make sure you're certain about discharging your registration because once you discharge it, the financing statement is removed from the register and it is no longer an effective registration. If you only need a partial release, you should amend the registration rather than discharge it.
So Terry, let's talk about the biggest fear that arises when you are sitting down with nothing to do, waiting for the next credit application to come through Apply Easy, and suddenly you receive an alert to tell you that the customer who'd been promising you faithfully for weeks that their account would be paid has just gone into administration. You're owed a lot of money, you have effective registrations in place, you think, and now crunch time has come.
Credit manager's worst nightmare. And this is where the PPSA really comes into its own when an insolvency event occurs. And by insolvency event, we mean an administrator or liquidator is appointed. We've acted for both creditors and insolvency practitioners, and we've seen both sides, and we've got good ideas, and we know the pain points for both. From the insolvency practitioner's perspective, he or she will want to know what assets are available for creditors and will adopt a fairly tough approach to any claims a creditor may raise. So this is where it's important to ensure there are no errors in your registration, because this is where it will be disputed.
So Terry, can your PPSA registration protect you in an insolvency event?
Yes, you may be considered a secured creditor and may have some priority over your goods and the proceeds of those goods.
So Terry, how do you normally advise clients in an insolvency event?
Well, you need to prepare. Step one, this is a legal term, get your ducks in line. Get your paperwork together, and by paperwork we mean the details of your contract with your customer that sets out your security interest, and that will be your terms and conditions of sale, ideally signed or accepted by your customer, together with evidence of the registration on the PPS register, namely your verification statement. Having got all of those things together, step two is to then send those documents to the relevant insolvency practitioner, attached to a letter which puts him or her on notice of your security interest. Something along these lines. Our company has a PIMSI, if in fact you do have a PIMSI, in the goods sold to the customer that have been paid for as evidenced by, that have not been paid for, I should say, as evidenced by the attached verification statement and the signed terms and conditions. Please acknowledge by return that any of our goods that have not been sold will be stored separately, that you will not disperse any of the proceeds of any sale of those goods, and you'll provide us with a copy of the debtor's ledger and the stock take of goods immediately when they're available. What you're doing by using that letter is putting the insolvency practitioner on notice of your security interest and reminding the insolvency practitioner that you expect him or her to be aware of your interest and act accordingly. Now, bear in mind that in the initial stages of any insolvency event, there will be some delays with getting answers. Often the practitioner has only just come onto the scene, they'll be struggling to work out what's happened. Any assets that rightfully belong to the customer will be available for distribution to creditors. So the first thing any insolvency practitioner will do is find out what assets there are and whether they have any value. If you make a claim for your security interest, it will be fully tested. So if you have any defects or made any errors in the registration, then those will now come home to roost. So once you receive confirmation that the insolvency practitioner recognises your security interest, it's then a matter of trying to maximise your claim. You may be able to recover some stock, you may be able to make a claim on some of the receivables, or even negotiate a settlement amount when there are very limited assets. Registration helps you negotiate from a relative position of strength. Although you will have certain priorities, the customer is insolvent and there is a lack of assets over liabilities. Another common occurrence in liquidation is having an unfair preference claim made against you by the liquidator. So, quick review. Unfair preference claim is a claim by a liquidator for repayment of payments made by a company within 6 months of it going into liquidation. That's generally speaking. And that payment gives an unsecured creditor an unfair advantage over other creditors in the liquidation in circumstances where that creditor knew, suspected, or ought to have known that the company was insolvent. So there are, of course, some defences, including the good faith defence, which is a pretty difficult hurdle to overcome in many cases, running account defence and a set-off defence. But the one we want to look at is that the debt was secured. So an unfair preference claim can only be brought in relation to unsecured debts. Corporations Act defines a secured party as someone with a PPSA security interest. That's where the PPSA comes in. If you have a valid ROT, the security interest created by this clause may be used to claim you are a secured creditor. However, depending on the value of the security, this may not be a complete defence because the security may only reduce the value of an unfair preference claim so far. So tip number 6, review your retention of title clause to ensure that it actually does create a security interest. And I thought we might just quickly look at a recent case of Trendfield and HAG Corporation. And this was a case where the secured debt defence via the PPSA was argued. It's a Queensland case and it's only been recently decided. So this was a preference claim by a liquidator where the creditor argued it was a secured creditor by virtue of its ROT security interest, which was registered on the PPSR. HAG claimed that its retention of title security interest plus the value of its security over the goods and the proceeds was greater than any payments received from the company in liquidation, i.e. the amounts being claimed by the liquidator. Unfortunately, the security interest was not perfected because it was incorrectly registered as transitional when in fact it was not. Due to the error in the registration, the liquidator claimed HAG was unsecured. So you have a PPSA registration, but it's invalid. Question is, are you still secured? The court held that the PPSA does not void an unregistered security interest. So whilst it may not be a perfected security interest, the unperfected security interest was still valid between the parties. So the court then had to determine at what point in time the security, i.e. the value of the stock in hand, was to be valued and how it was to be valued. So this has been fairly contentious in the past, but the case confirms the relevant time was the time of payment by the company in liquidation, and the value is the wholesale price paid by the customer, not the retail value. Claim for the security interest to extend to proceeds failed because they were frankly untraceable. So what the case shows is that the PPSA can only protect you to the extent of the value on stock on hand is either equal to or greater than the unfair preference claim. The other thing I thought we might quickly look at is priority rules. So when an insolvency practitioner is looking at who's owed money and who should be paid first, they'll have to do so in accordance with the rules of priority as set out in the Act. And basically, what you need to remember is this. A perfected PIMSI has priority over other perfected security interests. If you were playing cards, PIMSI beats everything. Secondly, a perfected security interest has priority over an unperfected security interest. And then thirdly, of course, if you're talking the same types of security interests, namely competing perfected interests against other perfected interests or unperfected interests, then whatever security interest is perfected earlier in time has priority. If you have a look at your verification statements, you'll see a time and date stamp on them, and that's what is taken into account when you've got the earlier in time. So if you haven't registered or your registration is defective, then you won't have priority at all. You'll fall to the bottom of the list. So some final comments, because we're pretty much at a close here for our final webinar. I think the polls show that the PPSA is sometimes considered too technical and too hard. Often a business relies on their own credit assessment skills and take some steps to satisfy themselves that the customer is good for some credit, and will just chance their hand by trying to keep the customer on a tight leash. If business is competitive and you're looking for sales, then those credit inducements can easily be extended, and you find that you're more exposed than what you'd like. Then, of course, as many credit people will tell you, the payments start becoming a little bit more difficult to get in. The thing is, though, that we see the 5% of matters where things don't go to plan. So what will happen is, of course, the sales team tell you that the word in the industry down at the pub is that the customer's struggling. Others are having payment issues as well. Then, of course, your alert hits the screen, and that's when you start wishing you'd paid a bit more attention at the start. At that stage, you need every weapon that you can muster to help you get paid. The more means you have of protecting the asset, and that's what it comes down to, protecting the value of your asset, which basically is your receivables. Well, the more means you have of protecting those, the better position you are in as far as recovery is concerned. For a small cost, the ease of process and the layer of protection that's offered. When people say, why should I register? We say, why wouldn't you take advantage of the protection the PPSA offers?
So on that note, Terry, for those of you out there who don't register on the PPSA, hopefully this webinar series has confirmed why it's necessary and how easily it can be done with CreditorWatch. For those who do register, review your current registrations and do a data wash with CreditorWatch if necessary. Get to work on your renewals now so that you ensure continuous perfection of your security interest. Consider streamlining your processes by reviewing your credit application and terms and conditions in preparation for renewals. But most importantly, don't wait. Act now. That brings us to the end of this webinar and to the series of webinars that we've done. I wanted to thank you all for your participation. And again, if you have provided questions or asked questions during the webinars, we'll endeavour to have those out to you very shortly. Thank you again for your time.
Thanks, Paul. Thanks, everyone.